Most investors miss every good buying opportunity, not because they didn't know what to buy, because by the time the price hits the right level, they're at lunch, in a meeting, or trying to wire money from their bank account in time. Don't get left behind. There are two simple fixes to this. They're quick to set up and they work forever. Let me show you exactly what they are. By the end of this video, you're going to know the setups every long-term investor needs, why most retail investors skip them, and exactly how to put both in place this week. Let's go. If you enjoy long-term investment videos and the mindsets and strategies behind them, subscribe to my channel where I post at least 5 videos per week on those topics. Now let's get into the subject of this video. There is an invisible problem that most investors don't see. You can stare at your portfolio for 8 hours a day and still miss the important moments that matter. The moment a stock hits your buy price might last just 5 minutes, and you happen to not be there when that happened. The price moved through the level and you missed it, even though you spent all that time watching it. What I'm going to show you is how to save that time and also still be able to act on that opportunity right away. Because the problem that most retail investors do, and I've seen a lot of investors do, is constantly checking the stocks. This is a waste of time, and by you looking at it doesn't change the price of it. Ultimately, it costs you focus, lost sleep, and loss of productivity and opportunities. But I'm going to give you 2 boring habits that can solve that completely. The first costs you around 30 minutes one time a week. The second costs you nothing but a small mindset shift. The first habit I'm going to give you is to put price alerts on every single stock or ETF that you're watching on your so-called love list. In other videos, I've mentioned about how to create that love list, so please check that out within my channel. With that being said, you need to set a price alert on those particular assets that you're looking into investing into. For every asset, stock, ETF, whatever it is that I'm watching, I set 2 price alerts. One is at my buy below price, which means when this triggers, I'm either going to deploy capital or consider doing that. Now, I might even set a market order for that as well if I'm really enthusiastic about the long-term thesis of that stock. And I also set one at the trim above price. And when this activates, I consider taking profit on my investment. For example, I'm currently invested and investing into Visa. So my buy below price right now is around 366. So I set an alert there at 366. If Visa drops there, my phone buzzes. I open my broker, I deploy, and then it's done. My trim above price for Visa is 520. If it pops there, my phone also buzzes. And that is my signal to review whether to trim. Now, as I mentioned with the buy stuff, you can also set limit orders where it buys at a specific price that it drops to, or you can sell at those prices as well. That's up to you. For me, I usually like to consider things unless I'm all in on one stock and I really want it to hit that price, then I would do that as well. Ultimately, this removes screen watching completely because you're not refreshing charts wondering, should I buy now? Should I trim now? You set the rule once, it's all automated. And when that alert comes up, you execute based on the information that you have. And the deeper benefit of all this is that it takes emotion out of the equation. When you watch the screen, checking it on your phone all day, it leads to an impulsive mind state, reactive mind state. You see red days and you think that's opportunities, or you panic and you sell. But alerts force you to commit before that price movement, before the moment, and then you're more calm and intentional about what you're doing. Because the alert just executes the plan that you've already researched and done due diligence to make beforehand. So where do we set up these alerts? The best option I would recommend is with your broker app. Personally, I use Interactive Brokers, and those alerts are directly connected to my trading account. When the alert fires, I'm literally within there already, and I'm one click away from executing or having that limit order activated, depending on my thesis about the long-term strategy of the movement of the asset that I'm investing into. And then if you're not using a broker account yet and you're just doing research, cool, you can practice as well. For free, you can use the Yahoo Finance app. You can create your own watch lists on there. I actually do both because I really value the news articles and stock analysis on Yahoo Finance. And that way, when the price alert happens, it may be due to some news or some changes within that company itself. And that's really great that I can just get that price alert, hop on there and see what's going on and consider, is that a good opportunity or not? But ideally, don't use too many apps. Yahoo Finance and IBKR is way more than enough. Set alerts on every stock that you're invested in or considering investing into, and update those at least every week or once a month whatever your kind of approach to time management and how much you want to be managing your investments on a day-to-day basis are. I don't encourage day trading, by the way, so don't look at things day to day like that. Now, with that being said, I did talk about that there was 2 habits. That's habit 1. Habit 2 that I want to encourage you to do is to always keep some cash available within your brokerage account. Not in your bank account. I'm talking about directly inside your brokerage account. Because here's a scenario that costs a lot of people money. The market crashes, the stocks that you've been watching for months drop to buy levels, you go to deploy, and the cash is in your bank. It's a weekend, it's outside of trading hours, and you've got to wait a few days for it to pass clearance into the brokerage account. You initiate the transfer, and even with fast services, it takes time. And by the time that money arrives, the dip is over, price is recovered, and you miss the window. This actually happened many times. For example, with the tariff drama, with the COVID drama, things crashed right down. And people that were able to deploy cash directly in those crashes saw that as what I would call a deep value opportunity. Great companies, great stocks that were just going through some turbulence that is not really directly related to their long-term trajectories. So you could have got them at a fire sale price if you had cash there to deploy within your brokerage account. So really the fix is simple. Keep some investing cash within your brokerage account. And some brokers even pay 4 to 5% interest on cash left within that account, which is really the same as a high yield savings account. So you're not losing any yield, but you're gaining speed. And let me give you a personal example of how this has messed me up in the past. I usually use Wise, formerly TransferWise, to move money into my IBKR brokerage account. And that can be fast, but it's still not instant. There's a delay and it can take up to days sometimes. And what I learned the hard way, even when you're transferring within IBKR, because by the way, if you try to go onto Wise and send it from Wise to IBKR, it takes much longer than if you go within IBKR and you request payment from Wise. It's much quicker. Even doing that is too slow. It's better just to keep some of your cash spare within that brokerage account. And some of my strategies that I've talked about on this channel before, working with dividend paying assets can be a great way to constantly keep cash flow influxing into your account and generating, building up. But ultimately, it's nice to have a nice chunk of cash in there ready to deploy for the reasons that I've outlined. So how much really should you have sitting in your brokerage account? I would say minimum 1 month of your typical investing budget. So if you invest 2K a month, then keep 2K there, spare cash. If you really want to have great flexibility, then keep 3 to 6 months or more in there. The more, the better, right? But just do what you can afford and what makes sense to you. If you need cash available for day-to-day livings, and if that's all covered, which I've talked about in other videos, that you should have ideally 12 months of cash available to you just to get from bank accounts or hard cash. If you have all that covered, your bills are paid, then sure, why not leave some in there for these big crashes? You know, if you saw like one of these huge tech giants that just dropped due to some pandemic or global crisis event, then that could be a really great opportunity to use to throw some serious money at it. So never let that cash be the reason that you can't take on those opportunities. And these 2 habits will combine into a complete system. Price alerts mean you never miss the perfect moment. Cash in brokerage accounts means you can act on the moment. And together they remove every excuse for not executing on your plans. And this is what serious long-term investors do quietly. They don't sit there looking at their phone all day. They don't sit there looking at the news all day. They don't refresh charts all day. They set their own rules and they prepare their ammunition. Their alerts tell them when to act. They execute the plan with their available resources right there, ready to go. Loaded, aimed, fired, killed. 30 minutes of setup that will pay you forever. So set the alerts, have some cash in your brokerage account, then forget about everything else until you get those notifications. Or even better, set up limit orders on the things that you really believe in. And that's the whole system. It's boring, it's repeatable, but it scales and it works. And that's what long-term investors do. Quietly compound their wealth while everyone else watches the screen and gets distracted and wastes time. Subscribe for more of these habits and tips that will help you to build long-term wealth.